everyone. Welcome to Market Insight for the second week of September, September 9th through the 13th, 2024. Starting with our top-down approach and the monthly. Monthly is in a reaction finally, right? We've talked about for weeks how overbought the monthly is, and it still is. And while it may seem like the market is overall has turned bearish on the daily or the intraday time frames, this is just a normal reaction from being so overbought. So we're coming down on the monthly, and we're coming into the area where March, April, and May. That's these three here: March, April, and May. The tops there. That's where the monthly met resistance back in the springtime. So I've been using the April high here, and it's 53.33. Actually 53.33 and a quarter, if I remember correctly. And you're familiar with that because we've had it on the charts for a while. And we've discussed in prior weeks. So let's turn to the weekly and see what this is looking like on the weekly time frame and see if we can get a little more detail. So as we look at the weekly, we see obvious supply coming into the market, right? Pickup in volume, widespread down, closing firm to the downside for this last week. Now I've highlighted the tops of May and April, actually April in here, or maybe this is March here. But that 53.33 and a quarter level is in heavy blue dashed line. That's that support level, and it's the obvious target here. So we see a pickup in volume after effort versus result. Let me get the pen here for a second. The prior week we had a little pickup in volume too over the week before, and did nothing with that. So that was a little bit of effort versus result. The week before that was no demand, right? Lower volume, and both bars were narrow range bars. And so note again that the narrow range bars at the top of a run often flag a turn, right? As they did here. David pointed this out in his book, and it was one of his favorite market tells. Now, remember, we're talking about tendencies here. Nothing is 100% in the market, but narrow ranges at the top of a rally do signal vulnerability to a pullback, and we're getting one here, okay? Now, one other thing to note about this is that the volume here on the way down is not what we saw back in July, right? On these couple of days, it's about half of that. So less supply than what we saw earlier on the way down. And that's something to be aware of. Okay, so let's shift over to the daily chart and see how that pullback emerged. Now, this is a wider or a broader picture, a wider view of the daily. And I'm doing this on purpose because I want to show you some key support here along this. Here's the 53.33 and a quarter in that heavy blue dash line. This is coming over from the weekly and the monthly. Okay, if we go back to March and April over here, those will be the highs there. So note that this level is about in the same area as this supply line coming down off of the daily over here. We actually, the initial supply line was here, but you know diagonal lines have a tendency to move, and so we had to shift it back over to here. And now it's quite a bit of time later, but that really has no bearing. It doesn't really matter. We're in the same area as 53.33 and the back testing of this downtrend channel. right? So this is confluence. When two or more trend lines converge in an area, we call it confluence. And the significance is that when we have double lines like this, it's going to make it stronger. That support should be stronger than either one alone. So given the confluence here, I'd anticipate some sort of a good bounce, assuming we off of that level, assuming we get down there or anywhere in here. You know, we're due for, we're getting now oversold in, you know, if we put a trend line on here, we're getting kind of oversold in the daily trend channel. And so I'd expect a good size bounce in maybe sometime this week coming. We'll see. All right, so let's blow up that daily chart now and take a good look at it. So again, you can see that here's that 53.33 and the downtrend, the supply line off of the daily, the downtrend, and the confluence in here. So you can see that we're kind of caught in a trading range over the last 2 weeks here prior to this. This heavy brown line is 55.88. This level was significant because this was the top here around, it goes back, there's a little bit more to this, but it goes, this was the resistance area that kicked off the last leg of the down move into August, into early August, and the climactic action that we had down there. So this level was really significant, and we couldn't hold that, and so supply started to come back in. Let's tape read this though. Monday was a holiday in the U.S., and so there was only trading in the overseas markets, the non-American markets, Asian and European. So not a lot of volume, as we can see down there, and not a lot of trading. And we just didn't see institutional trading at all in there. So narrow range, light volume. Nothing really much that you can read into that because it's a holiday. Then the next day we come down, supply clearly enters. We see a pickup in volume. And widespread down bar closing firm to the downside. And the key thing is underneath that 55.85 support level, right? Wednesday and Thursday attempted to recover or re-enter the trading range, attempted to push back up again. But in both instances, higher prices were rejected. And so what do we get? Instead, we get lower highs, lower lows, lower closes. That's distinctly bearish, not bullish at all. That's very bearish behavior. And then Friday, the market lets go from all that bearishness, broke the 55.02 line. That's this heavy blue line here that was important support back in late June and early July. Notice how the market was trying to hold in that area, respecting that area, but there was just no demand there, and it finally let go. And it pushed down to the next level, and this level was 54.30, going underneath that, in fact, all the way down to 5400 and closing below that 54.30 level, as we can see here at 54.19.5. So supply is clearly dominant. Even though overall the market is trending up and we're in a bullish market, no question about that in the bigger picture, the immediate trend is bearish and sellers are in control. All right, let's take a look at the major markets, and then we'll circle back around to the daily chart and see what's on tap for next week. So the major markets are pretty interesting. We noted last week that the NAS was having difficulty. It was the weakest of the three markets, and the Dow, and we can see that the Dow was a little bit earlier, was pushing for new highs. This was just before we broke last week on Monday. We're pushing for new highs here. And interesting, the trade station for some reason didn't didn't give me the Labor Day or print. That's okay. We don't really need it. So as Dow was pushing up, the NASDAQ was just not interested in higher prices. And so this is a form of non-confirmation. And soon after that, the market let go and headed down. Now note that the Dow is coming into important support, that 40,000 level here, right? And also on top of the Dow is already back down to April and May, and so is the NASDAQ. S&P is not quite there yet. So we're also on two of those markets, we're on top of that important support. But the NAS being underneath this level, it has to recover, right? It has to recover back up above, over the top of this. And that will be a significant thing if it does that, right? So think in terms of flush and recovery of this level here, 18 and change, whatever it is here. And so that needs to happen before these markets can turn back up into an uptrending mode. Okay, so the way to use the different markets. All right, let's go back to the daily and see what's on tap for next week. So again, we can see we're coming into that confluence area of 55.33 and the diagonal supply line from the all-time highs in July. And this should be good support. In fact, let's go to the 240 minute and look at some details here. We'll do a more refined analysis for us for the week. So we have this heavy black line is the daily diagonal supply line that we saw just a few minutes ago. I'll go back to that quickly. It's this red line. I didn't paint it in red. I put it in black here, or it's in black, but it's the same line, okay? And also right here on the heavy blue, we have 53.33, the heavy blue dashed line. So assuming we keep continuing lower because supply is in control, we've got support around 73 as it intersects with the demand line, and then again a little bit later at 50. And before hitting 53.33. So a flush and recovery of 53.73 might be of interest for a long trade. But keep in mind that we want to trade those small, if we do trade long, we want to trade those small size and small targets until we see real demand show up. Because sellers are in control and will continue to be in control until that demand does return. And so we may not see real demand show up until we get down into this level, and it may take a few levels. We may start up and then come down a little bit lower, come up, hold a little bit higher, and kind of work our way up. That's kind of normal, right? So what would real demand showing up look like? Well, we'd start recovering resistance levels, right? Remember, strength is seen not just in price and volume, but also in the breaking of resistance as well. Right? We want to keep that in mind. People forget that, but it's really important. So the first level is right here at 54.32, right? But the real key is going to see us get up over 54.75. This isn't the important level here. If we can do that, we will have broken a few resistances on the way up, and also this 240-minute supply line. Okay, and then from there, if we do that, if we can break up to that, then we get up to 55.28. We were 55.30, the same level here. We were talking about that last week and the week before. So we get up to there and push through that, and then we're up to 55.85, that key level before the 2-week narrow range trading range that developed, and then we sold off from. So 55.85, once we get over the top of that, then it's clear for us to retest the all-time highs. Those are at 57.21 and a quarter, if not make new all-time highs. All right, so that's what I've got for us this week. We will we're on normal schedule, so we will have deep practice again on Thursday, the 12th of September. I will see you then. So have a great rest of the weekend, a very good trading week, and I'll see you Thursday for deep practice. Take care, everyone. Bye-bye.